Welcome everyone to our 284th weekly discussion on everything investing, stocks, bonds, IPOs, crypto. Now that is becoming a part of our traditional finance. So why not? We'll also include that. Today, my big agenda items are, of course, I look at overall macro side, what happened, in this week, but then I also want to cover a couple of earnings. So market is hit of earnings season. Now we are starting to get results from our companies for Q2 2025, quarter ending June 30th. So this week was the first, I would say, the big week where generally start with financials. So we had a financials and couple of semiconductor companies, and of course, Netflix is a big one as well. But I think for the next, I would say 3 to 4 weeks, we should see a lot more earnings from a lot of companies that you and I are investors in, whether directly or indirectly through the funds that we hold in our portfolio, right? Even if you hold SPY, you can't get away with NVIDIA because that's probably the biggest portion in SPY, right? So, in the next 4 weeks, I think NVIDIA reports very late, but a lot of other companies, the Mag 7 or FANG or FanMaga, all those companies are starting to report results. So today I'll cover earnings of ASML and TSMC, and of course give you update on the crypto side. This was one big week for crypto, so a lot of stuff has happened on crypto sector in the few charts. I guess that's it. And of course, there are some questions that I received from some of you. I'll answer that. Anything else on your mind? I think we have a packed agenda, like always. I don't think that the steady 2 hour duration is enough to cover all this, but we'll stop wherever we hit our 2 hour window, and then probably we'll get into breakout rooms and do a little bit of a mixer, talk to each other. Fred says on Monday, Coinbase is going to start trading crypto futures. Wow, okay, that's cool. Yeah, I did not know. I think Coinbase has hit a new all-time high. Um, because of all these the positive tailwinds around the crypto sector. So Coinbase is now back to 400 plus. Wow. Right. So if we look at it, look at the move that Coinbase has made. 115 April, and now we are looking at in 2 months, it's like almost 3 times. And yes, it is new all-time high. So this was where after IPO, Coinbase was close to 350, 375, and now it is surpassed its new all-time. Coin pump and dump on Friday. Yeah, I don't care, what happens in a day, but as you can clearly see, right, in this whole big candle, eventually nothing moved, but it was a huge pump all the way almost to whatever 420, 445-ish, and then huge dump and eventually close at, for almost nothing but from where it started. But exciting times on the crypto, I think generally. Jose says about stable coins. Yes, I'll talk about it on the biggest reform in financial services industry, or let's say past few decades. So we had a Genius Act that's now been signed into law. So we will talk a little bit about that. All right, so let's get going, guys. As always. Oh yeah, other thing is I also want to take you through in terms of China reported its the GDP numbers for Q2, and then I read an article around how some of the different ETFs on the China will behave differently. So I thought I'll share that with you guys. So if you are investing in China, I'm not saying that you should, but if you are, then there are a variety of ways you can invest in China. I just want to take you through in terms of we should pick the right ETF based on what we think is gonna, which sector of China is gonna um, be growing, and based on that we should invest. So I'll talk about that as well. All right. So before we start, as always, uh, anything that we discuss here is not a financial or investment or tax advice. A little bit of entertainment, little bit of education. We get to know each other. That's fun. We try to help out each other, become more educated as an investors. Right. So that's the main goal for us to meet here every week. Before I start, let me ask anyone here joining for the first time?
Yeah, I'm joining for the first time.
Hi Vivek, this is Gagan. Yes, I'm here for the first time as well.
All right.
Yeah.
Maybe
Hi Vivek, this is Gopal here, first time.
cool. So we got Gagan, Gopal, Sachavis. Yeah, probably we can spend a couple of minutes on two introductions. So what I want to know is you as an investor, what kind of investor you are, and what you're trying to get out of these 2 hours that you will be spending. Let's start with M. Chavez.
All right, yeah.
Pronounce
So
your name.
I should I'll update it to my name's Matt. I
Okay.
just put M Chavez. That's my last name.
Mhm.
I was laid off. I worked in the video game industry. I was laid off back in February. So I just decided to absorb anything I could about trading, and I just came across Meetup, this this event here on Meetup, and I'm just mostly curious about what its setup was like.
Okay.
But yeah, I'm just interested in all kinds of trading, crypto trading, just standard stock trading. I have a Schwab account, Fidelity account, and so I'm just kind of I'm trying to be a sponge and trying to absorb as much as I can. So yeah, I'm not sure what to expect in this class. Just learning, really.
Great. I think a couple of things. I like what you said, that you are curious. So which is I think very important. Always be curious, trying to learn new things, which is great.
Yeah.
You said you use the word trading. So me personally, I'm not a day trader or a swing trader. I have a much longer outlook. But do I trade options every day? Hell yes, right? So, but those are my baby steps towards my longer term investing thesis to reduce the risk in the portfolio, right? But I guess we in our meeting we do have some who are like day traders. Like there are folks who will trade zero DTE options, right? No, that's not me. So yeah, find your company. Maybe once we move into the breakout rooms, touch probably they can help you in terms of if you're looking to day trade, etc. Something which I don't do. But there are others who have done it. All right, maybe one more introduction. Who wants to go ahead?
I can go.
Yeah, go
So,
ahead, Gagan.
the zero DTE trader, that's me, Vivek. Good to be here, and really happy to meet everybody virtually. So, my name is Gagan Ahuja. I used to be, or I'm still am, technology executive. Almost 20 years of experience in the analytics space, data, BI, and so on. Was impacted just like everybody else very recently as part of the layoff. Have been passively doing the investment with some successes here and there, and obviously big failures compared to the successes, but almost 18 plus years of experience. Then beginning COVID, or I would say a little bit prior to COVID, started doing investing very, very heavily, started spending a lot of time in investing, primarily on the stock side. And for the last 2 years, I completely pivoted to options.
Mhm.
So that's sort of my bread and butter. I do this day in and day out basis, zero DTE, maybe covered calls, Vivek, 30 to 60 days to 180 days out. I
Yeah.
love what I do. So hopefully trying to make something bigger out of it as a full-time gig, and let's see how it goes. But so far, very, very passionate about the whole ecosystem when it comes to options, when it comes to swing trading, when it comes to ETFs, as you said, and bunch of other things. I do futures too. So
Mhm.
looking forward to a lot of good things. I have heard a lot about this session of yours. So trying to pick up some really good nuggets out of it, and happy to answer anything that you may have or the group may have.
Yeah, great. Thank you for joining in, ma'am. And I'm sure our group will benefit from your experience. You have spent, experience in very different ways of investing slash trading. So that's amazing, right? And that's the whole idea is, hey, we have a folks who are like, I've never traded futures, and I know Shri will, if she is here, he'll again tell me why you have not started trading futures. Every year he will try to motivate me to start looking at the futures, and I'm like, you know what, I'm not doing it. But yeah, but great to have you, join this. So yeah, good one. So I do see a common thread around based on what's happening in the tech industry. A lot of people, and I think it was like yesterday or a day before, someone was telling me around this. A lot of folks are looking at alternative sources of income so that you are not dependent on, so that your future is not controlled by someone else, right? And then, because things will happen in the market, and if we have only one source of income, that's really, we're putting ourselves and our families' financial future in jeopardy. I read somewhere a few years ago, maybe decades, that we should have at least four sources of income, right? And that time I had, so which is one, like your um passively, like royalty income, etc. I'm like, I can't write a book, I can't sing, so I try to focus my side on, if I want to build my own source of income, probably it will be in the capital market, right? So that's how I started my journey way back, and it had served me well. That when when in 2022, sorry, early 2023, when I had my last job, then I decided, you know what, I'm done. Let me just focus on full time on investing, and be independent. And all I need is basically, I love this job because uh, I think I've spoken earlier also. It allows me to have a control on my four C's, right? One is coordinates. I can work from anywhere. If I'm just investing, all I need is a connection to internet. Other is calendar, right? If I am busy in some family stuff, I don't want to work, I won't work. I control my calendar. Third is a company, right? If I don't like a particular company, I sell the shares. If I don't like a CEO or CIO, or if a company is not doing good, I can sell the shares, move into different company. Not possible if I'm working on a job. You suck it up, right? And finally, yeah, it brings in some cash. That's what we need to survive as well. So that's what prompted me to focus on investing slash trading, maybe as a very serious business. It's not a fun for me. Fun means it's not a game for me. There are some people who want to gamify the stuff. It's not a game for me. It's a pretty serious business for me. It put food on the table and keep a roof over my head. So that's how I started my journey, and good to connect to you all. All right, so let's start with today's session. A few things before we actually get into the meat. I just want to tell you the book which I'm currently reading, and I would suggest anyone who is interested in investing to go ahead and read this book, right? How Not to Invest. It's almost, I think, 630 pages book. I started this when I think 2 weeks ago, I told you on the July 4th long weekend. That's when I started, and I'm trying to catch up, every day. But it's a great book. It's more from a mindset development perspective, because over the years, what I realized is investing is more about mindset than anything else, right? And this book basically just talks about the mistakes that we should not do, right? In the markets, money will just compound if we do not commit the mistakes. So investing is kind of a negative art. It's not that you have to be great. You just have to be not to be stupid. If you are not stupid, you'll do fine, right? It is very unlike some of the other professions, right? For a doctor, you have to be a great at, on whatever surgeon you are, a doctor you are. For an artist, you need to be a great painter. An investor really don't need to have a great IQ or a great analysis. As long as you don't do stupid things, just avoid doing stupid things and we will do good. So this book talks about a lot of those stupid things that we should avoid. I think, almost done 75% of it, but it's a great book. What else I did this last 2 weeks? I went for a Schwab meeting, was able to snap a picture with the personality that I've seen on Schwab Network, Mr. Ben Watson. He was kind enough to allow me to take a selfie with him. But I think, so like I mentioned you earlier, so Schwab had a 2-day event. One day was a technical workshop, and then the second day was options, basics of options workshop. So for me, my reason to attend was day one, because I don't do a lot of technical stuff. So I really wanted to understand more on the technical workshop. That was really useful. Beyond that, my main intent was to go and meet a lot of retail individual investors, talk to them. Investing otherwise become very lonely business. In the whole week, this like Saturday meeting is the only one where I actually get to talk to a lot of you. Otherwise, it's all reading about the businesses, analysis of a businesses. It's a very lonely business. So I do, I don't want to miss up opportunities wherein there are other investors. I would like to go and meet them. The third thing which was great was Schwab brings in some good experts. So they had a expert from Omaha on Think or Swim. So I had a lot of questions around Think or Swim. How can I do this? How can I do that? If we call up Schwab's or their technical support team, they probably don't know. But on these workshops, they bring in some of the experts. So on day 2, which was like options basics workshop, I spent whole of my day standing outside and chatting with a Think or Swim expert, Tread, and even watch him resolving the queries from other people. That was a great learning for me. So how many of you actually use Think or Swim? Let me ask that question.
I do.
I do as well.
I was just thinking that maybe I can share some of the stuff that I learned on few things on Think or Swim.
Please, that would be very useful.
Okay. Hi, Tanya, welcome. So yeah, then so I did speak to him. How can I do this and think of a few things that you can't do it. And okay, I said, why don't you take it as an enhancements request, which they had, but I'll share maybe in our next meeting some of the scripts, etc., that he created and he shared with me. So that was last week, and I think I got to meet maybe some of you over there. Right, so that's great. What else? Now let me get into and answer some of the questions that I received from some of you around the option side. And I did mention to you saying, hey, some of these questions are very relevant and will be useful for all others as well. So if you're okay, I'll probably answer it in this meeting. So let me go through some of those questions. The first one was, I opened a put spread and okay to acquire shares. Should I still close it by 21 dates to expiration or ride it all the way to expiration? So if you go back and look at some of the option bootcamp videos that I've done, and this comes from Tasty Trade fellows, that you will generally recommend closing your trades before 21 days to expiration, because beyond that, you start to have a lot of a gamma risk, right? So your position, which is profitable, could start to lose money if your stock moves, because there's the options move much faster than the stock movement as you get closer to expiration. So the general idea is, hey, if you made some money, close it before 21 days to expiration, maybe then put up a new trade. So the question was, I have a put spread. Right? So my risk is defined because it's a spread, and I'm okay to acquire the shares. Should I still close it or ride it all the way to expiration? Right? So now what I wrote to this person was, I mean, it's a little bit of a personal choice. If you really, really want to, acquire the shares and you don't mind, let's say if the shares of your short put was 165 and you acquired the shares, and after that the shares have, after expiration, shares has fallen down to 140, and you're okay with it, yeah, go ahead and ride it all the way through expiration. Me personally, what I would do is generally I will close it and probably open it up a new one for the next expiration period, right? Again, there is no, I would say, right or wrong answer in it. It just depends on how you as an investor would feel after, what has happened. So sometimes people will have a, buyer remorse and say, gosh, I should have closed it because now the stock has fallen and I'm sitting with with that stock. Okay. Again, any other thoughts? So Dave says made money with Circle, a long call this week, got greedy and lost half of it the same day. Yeah, Santa said, unless you want to free up the buying power. Yeah, that is true. But then then you're also allocating the capital in buying those shares. So I'm not sure it's like, you still, your capital will get allocated whether towards the option side or whether it will be to use on the share side. All right, let's look at the next question. Some have earnings coming up. Like I said, we are in earnings season, right? And now, right now I'm finding a little difficult to, build up my August expiration portfolio because a lot of them have earnings coming up, right? And before expiration, should I be doing anything differently ahead of these? Right? Now, when the earnings is coming up, there is a lot of uncertainty during earnings, right? Anything could happen. Companies could report great results. Look at Netflix. Be it on bottom line, top line, every metric, stock is down. Because there is a lot of uncertainty. You don't know how the stock is going to behave. First of all, we don't even know how the business is going to be. What business numbers the company going to report. So there's a lot of uncertainty that gets built in run up to the earnings. So you will generally see the implied volatility going high. So my response was, hey, if there's an earnings coming up, then the IV will start to, implied volatility will start to increase. And at that point of a time, I would rather I actually reduce my profit target and close it at a lower profit. Because if the implied volatility is increasing after you have sold the options, it goes against you. And I have, let's say yesterday, I had closed one short put on Arista Networks at 30% of max, 30 or 35% of max. Generally, I'll put a GTC order at around 55 to 60%. But now, because we are in earnings season, and I know that Arista is going to report results in another, I think, 2 or 3 weeks, and IV will be increasing. Whatever. I made 30 or 35%, I'll close it. Right. So that was my response. Anyone have any different thought? I hope these are useful for you. I mean, that was a reason why I thought I'll cover it in this call, because these are pretty generic questions. And if you're trading options, you might have a similar questions around, should I do this? Should I do that? I thought I'll cover in this meeting. Useful? Shall I go with some of the others? Let me know.
Vivek.
Yeah.
I got a question. Some Singaporean has been throwing a company in China, and I vaguely know this company, but it's kind of like the company that I earned a lot of money from, a percentage return is Xiaomi. But Xiaomi at no time until this year has been in the news.
Yeah. So hold on your question on Xiaomi. So when we
Okay.
talk about China, let's bring
Thank
that
you.
in. Yeah. My mind was around, any of these. So I did see a couple of them saying, hey, it's useful. Santa says for short puts, it makes sense. How about a covered call? Right. Now I would say the covered call, what was the intent while going into covered call? Right. So I do covered calls based on if my intention is just to scalp some premium and reduce my cost basis. In that case, I will close it at a lower profit target. But if my intent is, hey, I really don't like the business, I no longer want to hold in my portfolio, and hence I've done close to 40 delta or 50 delta covered call, then I let it ride, and if it gets called away, it gets called away. Right? But if I own a shares in which if it gets called away, it's going to be a capital gains hit to me. In that case, I will maybe close that covered call and give myself a lot more duration and put it, let's say if I'm an August one, I'll probably close the August one and start putting the September one. So when you sell a call, and so you need to, at least personally, I can only talk about what I do. When I am selling a call, I'll have a specific thought process on why I'm selling a call. Am I selling a call just to gather premium and reduce the cost basis? Or am I selling a call because I don't like the stock and it will be okay to get called away rather than putting a limit order? Might as well sell a covered call against that, right? I see another question. When will you reopen, after earnings or wait for price drop opportunity? First of all, we don't even know whether after the earnings, whether there will be price will be dropping or will be going higher. So now immediately after earnings, right? The IV will. So if you really want to put the trade, put it close to earnings, because then the IV will be maximum. But you do run the risk of stock having very wild movement after earnings. For example, if you are okay to buy Google, right, at whatever, let's put Google at 170, right? We'll go to Google. Let me switch on to daily one. And when is Google reporting results? It's the next week. So I think this is already just up. But let's say if you're okay to buy Google at 185, if you're okay to buy Google at 175, $10 down, then wait until the juice, near the earnings when the IV will be maximum, right? And at that point, if you sell a short put, you will get a lot more premium than what you're doing it right now. But the risk that you run if you do that is, hey, after earnings, what if Google falls down to 160 or 165? Which could still happen even today, but at least you got a much bigger premium because you sold when the IV was high. But if you're okay, you don't care that the Google will fall down to 160 or 65. Yeah. So I do have, a couple of takers on which I'm waiting for the juice to build up in the premiums, and I'm gonna sell either the strangle, if I were to do a delta neutral, or maybe a short put if I am okay to acquire the shares near earnings when the juice is built up in the options. So that's what I do. All right, let's look at
When you say juice build up, is there like a certain mark?
No, I know that that point of time the IV is highest in the recent times, right? And let's say if the stock doesn't make much of a movement after the earnings, right, the IV is going to drop. So your trade is going to benefit just because of the sharp drop in the volatility. So one thing which is sure, whenever doing anything around earnings, one thing which is sure is we don't know where the stock will go, right, after earnings. But we know for sure that the volatility is always going one direction, which is down, right? Look at, this is Google, right? So this is the earnings announced. So below I plotted, we are showing IV rank. You see the huge drop in the IV rank. The stock, what happened to the stock here? Stock also a drop. What happened to the stock here? Stock has actually gone higher in this, but the IV has dropped from 70, IV rank from 75 to 39 or 40, right? This is the earnings. Stock has gone down, IV also fell. This is stock up, but IV will still fall. So one thing which is, and there are people who use the strategies to do earnings trade. I used to do earlier, my earlier when I studied options many years ago, I did the earnings trade for 3 years, trying to just benefit from a drop in IV. You can do delta neutral earnings trade, but after doing it 3 years, I realized it's more of an engagement tool. And it's like a 50-50, made money in some, did not make in some, because sometimes the stock will move a lot and then it will go against, the deltas will go against you, even though you benefited from a Vega drop. But if you are okay to acquire shares, and if let's say the shares don't move and just the IV drops, your trade will benefit. Again, so there are a lot of interesting stuff that can happen during earnings. Third one, for an options portfolio of 100K, is there a typical max number of option trades per month that I should not exceed? Right. So you should look from a point of view of overall, the theta, in terms of how much of theta you have in your portfolio. If you're just starting your journey, right, then I would rather focus on your buying power. So if you want to think or swim, it will tell you what's your option buying power. This is a paper account. I don't have even single trade, right? So if you have a 100K account, which says your liquid and net day trade is 100K, then I would rather focus on option buying power. Maybe I should always have close to, and again, because I play very conservatively, right? I want my option buying power close to 60 to 70,000. It means I'm only utilizing 30 to 40% of overall buying power available to me. So the question is, but if you are doing only the defined risk trades, then it's okay. You can go up to 60, 70. But if you are doing undefined risk, it means your risk could become higher if the market drops. Then I generally don't like to have more than, utilize more than 40% of the available buying power. So rather than looking at the max number of trades, I would also look at how much of buying power am I consuming. Now, the other thing that would be to focus here is, rather than doing one big trade, I would rather do smaller, more number of trades. Because at the end of the day, all we are doing is trying to play with the probabilities. If you're doing a 30 delta trade, if you're selling a 30 delta short put, you have a 30% chance that you have a 70% chance that it will expire worthless, right? It's a probability 70%, but that doesn't mean that if you do a 10 trades, out of the first 10 that you have done, 7 will be profitable. That's not how the probability works. For probability to work, you need to have a lot more occurrences. So I would try to create more and more occurrences by, instead of doing a $50 or $100 white spread, let's say if I done one short put spread with $100 white width, it will consume 10K. Maybe I'll do, $20 white and 5 different trades. Maybe at 5 different expirations, right? Or I did one and wait for the IV to move or the stock to move and then do another one. Give yourself more occurrences so that the actual profitability the numbers goes towards what the probabilities suggest you. If you flip a coin, you're not gonna get 50-50 if you flip coin only 100 times. But if you flip a coin 10,000 times, your heads and tails will get pretty close to 50-50. But then you have to make sure when it comes to your option side, how do you stay in the market and don't blow up your account before you actually achieve that 5,000, 10,000 trades? So the mantra which I've been using is, trade small, trade often. And if I go back and look at the number of trades and how much is like percent win versus percent loss, it's getting close to what the probability of profit suggests. But it's because you have done 5,000, 10,000 trades. It's not going to happen in let's say first 100 trades. Then you say, I like 70% of should have been profitable because I'm doing 30 deltas. But that's not how the probabilities work. You need to generate a lot of occurrences. So there is no max number. Max will be determined by how much option buying power you are consuming. And the other consideration will be if you can do more trades rather than doing one big one, rather go for a more number of occurrences. So that math will work out. All right, I sold ICSH to generate cash. ICSH is it's a T-bill ETF. These positions still open. Do I have to leave it as a cash or I can put back in ICSH? I don't want to use my margin, which I understand will cost me at an interest rate of approximately 12%. So first of all, and I think I covered it in our previous session. If you are paying your brokerage firm 12%, don't. Because we talked about a box spread strategy in which you can borrow from your brokerage firm, and it came out to be approximately 4.7% for me. So never ever pay 12%, at least to Charles Schwab, because they charge 12%, 12.5%, right? So first of all, if you are using margin, don't raise cash by doing a box spread strategy, and you'll end up paying maybe close to 4 or 5%, which is way better than paying 12.5%. Okay. Now, other thing was, you can always put back in ICSH because if you're already opened the positions and you still have a cash left, put it back in ICSH, because negative cash doesn't give you margin call. So negative buying power will give you margin call. And if your cash goes negative, do a box spread strategy to raise a cash and not pay the margin interest. But I think now the last one is the penultimate on an options portfolio of 200K. Right now my max loss is around 10K if I close all the trades. Yeah, because there is some time value left. And my assignment exposure around 195K, assuming I take assignment of everything. Are there any by and large rules of thumbs or best practices here that I should follow? Again, so I would say if you are okay for all the assignment, if you take all the assignment, basically your portfolio value will be around 195K. And right now, and it means you have a loss for a 5K only. But if you close everything right now, you'll be losing 10K because of the time value left in it. And I think it's a very personal choice. I don't think there is a one perfect answer. From a best practices perspective, we'll go back to the question that was, I would say, this one, right? Are you okay to acquire the shares or not? What you don't want to do is trying to avoid the loss in option trades, and basically you collect the shares that you really are not too bullish about, and then saddle your portfolio with the businesses that you really don't want to own in the long term. So when you're looking from your P&L perspective, and I did the mistake earlier wherein, oh, come on, let me own the share, then I will keep selling covered calls. It's a high volatile share, so I can maybe recover a lot of costs that I put in. But then I realized some of those businesses that are not great can fall on 30, 40%, 50%, 70%. And no amount of selling covered calls will be able to compensate for that. So if you want to, let's say you say, I'll wait for the assignment because then I'm going to, my exposure is only 195K. But what if in those assignments you have a stocks which are not good businesses to own? And you only did a put spreads or a put short puts because the IV was higher. So don't do the same mistake that I have done. If you want to do if you want to do a short put, make sure you love the business. You're ready to hold the business long term. Just don't go after some high IV stocks, which currently we see in the markets, right? They'll give you great premium. Some of them are giving you premium of like almost 5% for next, 30 to 60 days, which is pretty attractive. But there is a reason why those stocks are so volatile. And I think the final one would be, is closing 3 business days before earnings good enough? I don't know. I think that is cutting too close because the IV is already juiced up. I would close it maybe a week, 10 days before. But if the trade is profitable and earnings is 3 days out, yeah, close it, man. But I would rather close it much sooner than waiting almost up to 3 days, because then you're getting, you already have a lot of impact of from the volatility from the Vega side. So, yep, hopefully these helped. Yeah, if you have any other questions, etc., you can send me an email on. Okay, and hopefully I'll respond. If not, we'll bring up those, in these meetings. Cool. Okay, a lot of comments. Probably I'll get back to comments if once we are in the middle of a session. But if there's anything related to these questions, you may speak up.
Just one thing to repair. For example, in a put spread, they usually say the short legs around 30 delta. Is there a recommendation for the long leg as well? Like, should it be around like 5 delta or something, or is that also? Again, I'm just wondering if there's any sort of statistical research done that if you stick to this sort of a rule between 30 delta and 5 delta, then probability is 70% over 10,000 trades or something like that.
So when you have a short put at 30 delta, right, that means there's a probability of the stock
around 70%.
You have around 70%, right?
Right.
Then you can add whatever premium you have received that increases your break even little further, right? But when it comes to what's my long leg, me personally, I don't look at deltas when I'm looking at a long leg. All I want to look at is how much buying power do I want to consume in this particular trade, right? So let's say if I have, and I remember when I started my journey, I want to trade in around 25 tickers, 25 to 30 tickers, right? And now let's say if I have to trade in 25 to 30 tickers and I have, let's say 100K of portfolio, it means on an average, each ticker will get allocation of around 4K, assuming 25 tickers, right? Now, if I have a 4K that I can put a risk on one individual ticker, now could I do, $20 wide 2 trades, or shall I do $10 wide 4 trades? So that's how I used to determine how wide do I want to keep, because that amount of a buying power would be blocked from my account. So I didn't look at the deltas at that point of time when it comes to the long leg. I rather looked at if I go $20 wide, of course I'll collect a little more premium, but then it's blocking $2,000. I might do maybe $10 wide and then put or have an option to put another trade if the stock moves wildly. So that's how I look at when you're trying to put a long leg.
Thank you. Thank you.
All right, let's look at the markets. From the markets perspective, markets continue to climb the wall of worry. Despite all the doom and gloom we have seen, and I think recently I also saw Jeremy Grantham of GMO, great investor, by the way. You should listen to it just to get, be more sane investor. Otherwise, it's very easy to get carried away when everything is going up. Everyone is bullish about it. Sometimes you need a dose of some bearishness. So Jeremy Grantham is one, but don't follow him unless you really, really want to. So make your own investing decisions. But despite all some of the astute investors I've been saying, markets continue to climb the wall of worry, man. The numbers still look good. So we had a PPI in the CPI numbers that came out. Right? PPI was in line with expectations despite the tariff increases. So the administration is already trying to, beat the Trump, blow the trumpet saying, hey, we won, tariff is bringing in billions and billions of dollars and zero inflation. Me personally, I would not claim it as a win right now. I will look at inflation numbers that are coming out in fall to really know if we're gonna have a inflation due to tariff or not. Because when we announced tariff in April, then we put it on pause, right? And then we are saying in August 1st deadline, we're gonna impose a tariff and all that. So first of all, not all tariffs are not even in place. Number two, even if tariffs are in place, companies will generally have 3 to 6 months of inventory that they can consume, right? And while they are waiting to get a clarification on what the eventual tariff would be. So I think it's too early to call it as a win. It's too early to say tariffs have no impact on inflation. Eventually it may not, but I don't think that, that we can, the game is still on, right? We are in terms of the tariff and its impact on inflation, we are early in the cycle. I would rather wait to see till fall in terms of what happens, in to the prices at that point of a time. Right? So, but so far the numbers look great. So CPI came in line with last week. It was in line with that expectations. While prices were higher in some categories, it was lower in some other categories like new and used cars. PPI, which is generally considered to be a harbinger of where the CPI will end up into. This is basically will tell how the producers, how the manufacturer, what kind of pricing pressures are they feeling for the inputs which they need to produce the goods, right? And eventually some of those costs will be passed over to consumers. Again, the PPI was 2.3% below the forecast of 2.5, and the last one revised 2.7 reading. So, but like I said, I think it's too early to judge. So we'll wait for till another, I would say, 2 to 3 weeks to see the impact on inflation. Other thing, retail sales have surpassed the forecast, right? And 70% of US GDP is consumption driven. So as long as the consumers are consuming, our GDP will grow. If the consumers are feeling jittery and stop or slow down the consumption, that's where impact on GDP. But so far, retail investors look to be doing fine. If you go to any mall, damn, it's hard to find a parking place, right? So that tells you, right, a boots on the ground research, or scuttlebutt research, like Peter Lynch say. Go to the mall, go to a restaurant. you see how full those things are, then you feel, "Oh, come on, I don't know whatever those pundits say on the CNBC or Bloomberg, consumer still is healthy, they're still spending." That was all about review. That's all what has happened in the past. Let's look at what could be happening in future. Some of the investors, they may be picking up the signals from some positive signals from trade negotiations, right? So we had a trade so-called deal with Vietnam. The biggest one we are still waiting is with China. I mean, we have been having the pockets of our industry, some relaxation, etc. when selling to China. We saw about NVIDIA. So NVIDIA's H20 chips, which NVIDIA had made specifically for China. And then the government put restrictions on you can't sell it to China. And I think the last quarter, NVIDIA took a charge of what, $4.5 billion for that. Now the government has said, yeah, you can go ahead and sell it to China. So we saw what happened to the NVIDIA stock, right? It was above $4 trillion as a market cap. I think NVIDIA is now hitting a new all-time high. It's close to what, 170 now, NVIDIA? Because now that $4.5 billion charge that they have taken, maybe now they will be able to sell those chips back to Chinese companies. So pockets of positive sentiments coming out from some of these trade negotiations, right? And again, this negotiation happened with China because we want the rare earth metals from China, which we don't have. We're trying to build that capacity, and one company which is like going through a roof because it's focused on rare earth metals, but then China wants those chips, so we're having these negotiations. Worst case scenarios like high tariff, no negotiations, run-rate inflation, that's not likely to play out anymore. Right? So investors in the market is sensing that, oh, come on, when we had those April time frame, maybe around May, we had no idea in terms of how the negotiations will go. We were assuming a lot of increase in runway inflation because of increase in prices and all that stuff. And maybe 145% China tariff rates. None of those things are going to happen. We don't know what exactly will be the tariff, but we do know that it's not going to be 100% or 145%. So I think that's giving some confidence to investors. Looking into 2026, market is expecting prices and inflation to stabilize. I mean, month to month, we do see sometimes inflation will go higher, but overall trajectory is still going down, right? And if it continues to go down, we also expect Fed to lower the tax rate, which will be good for the market. And then the other stuff is around whole stimulus from the new bill that have been signed, a big, beautiful bill. And then eventually the deregulation on all that stuff. So there are a lot of tailwinds behind the market. And maybe we will have maybe the second time in the 75 years that market will do another, who knows, 20%. We had a great 2023, 2024. And just because the market is an all-time high, a lot of talking heads, I was assuming this, how high can it go? It has to come down, right? And that's where the most of the trouble starts, when you start assuming that it has to do this. Right? And I know some folks who sold off saying, oh my God, it's too high. Right? It will come down. I don't know if it will come down or not. Nobody knows. And markets just so far, now we are at what, 7th month? Markets have been continue to climb. We already had a 20% drop this year. I mean, we had 20% drop this year. We had 20% drop in 2022. And then we had a 20% drop or higher in 2020. So in last 5 years, we have had a kind of a 3 bearish market drops. And despite all that, it's been a pretty good last 3 years. So that's at a higher level. One last thing on the macro side is this is an interesting one. I read an article on Bloomberg where the author had posted the picture of a purse, and which basically talks about why the Fed independence is so important, right? We've been hearing a lot of, I would say, news or sometimes the headlines around DJT wants to fire Jerome Powell, and then a lot of the business associations or the people that you should listen to in the business community will go and tell President, Mr. President, please don't do this. Please. I know we all want a lower interest rates, lower Fed should cut down the rates, which will be great for the markets. But if you fire Jerome Powell, that's going to backfire, because once the reason why dollar is so strong and still the world reserve currency is that so far world knows that if, the currency in the US or the monetary policy in the US cannot be manipulated or forced upon by the governments. Give the full hand to government, they'll do all the stupid things. So this paper bag has been made by the currency notes of Venezuela, Bolivar. The currency becomes so worthless that this bag made out of the currency notes probably sells for more than what the notes are worth, right? We don't want that to happen for US dollar bills. So independence is important. And I think then later we saw Donald Trump saying, hey, I'm not going to fire Jerome Powell. We'll have a much worse issues if we give a hint to the markets that government has started to control Fed. So that's that one. That's the last item on the macro side. Let me now go through some of the comments that I had missed earlier. We talked about circle stuff. Netflix was interesting. Dave says, I had August 15, 1130, 1100 short put spread. It was down 60, and yet the 1130 put was still up. It may be because of you profited from the drop in the vol. I guess that may be the case. Otherwise, there is no reason why the stock goes down and your short put is up. The best lesson around this, the volatility side, was learned in 2021 meme stock. Like a lot of newbie option traders came into the market, and they had bought call options on GME, etc. And then they realized even though the GME stock went up, their call option still lost the value. Or sorry, it was the other way around. Sorry, my apologies. It was the other way around. So folks had bought put options on some of those meme stocks, and the stock actually went down, and they still lost money. Because some of those meme stocks, they behaved a little differently than the normal stocks. So in the normal stocks, let's say you talk of the big cap companies, if the stock falls, the IV will rise. But when it came to the meme stocks, if the stock falls, the IV also drops. So what happened was, then I saw some of these Twitter etc. folks talking about, hey, I bought a put option, stock is down, how come I'm losing money? Because the vol fell down much faster, and all the positive benefits from the delta movement got negated by the negative aspect of the volatility, because that dropped like a rock. So in this case, I think that's probably the reason. Or Gagan say, or income too from your sorry, I think probably I missed the context there. Sorry, I'm reading the comments now. Dave is talking about a stable coin. I think, thank you, Jose, for responding to it. Newbie question, how much is high IV? So I don't look at a normal IV number, Santa, because IV number in itself doesn't tell me whether I should put stock A or stock B. Let's say IV, and I'm just throwing up some number, right? 40 IV on Tesla is low than 30 IV on Coca-Cola. If I have if I want to put a short put, and again, I'm just want to profit from the wall side and just want to, do a premium harvesting, I would rather do a trade on Coca-Cola at 30 IV than on Tesla on 40. So what I want to look at is IV rank. And if you search for IV rank calculation or on Thinkorswim, if you're using what IV percentile, what they put in as in Thinkorswim, it is actually IV rank, which would basically tell you where the current IV is based on the last 1 year of where the IV has been. Let's say, so you basically normalize the lowest at 0 and the highest IV in the last 1 year at 100, and then you rank where your current IV is. And so Tesla, because its IV is generally very volatile, so 40 IV maybe had an IV rank of 20. Whereas Coca-Cola, which is a less volatile stock, the 30 IV may have an IV rank of 50. So you want to focus on where the IV today is relative to where it has been in the past on an individual stock. But if you want to compare, if you want to make a decision on should I invest in A or B, focus on IV rank. So that's why I look at anything IV rank above 30 is fine. I mean, I have done in 2017 when the VIX was like single digits. I would be lucky to find anything above 25. But nowadays it's easy to find anything above 30. So maybe above 40, it's fine. If it is below 20, that's where I try to look at maybe closer trades, because there is not much of a external value that's that's available, that's remain in the trade. So yeah, so look at 30 to 40 IV rank should be good. Dave said, look like a tasty trade small trade often. Yeah, I learned from them. So I answered Aditya's question. I've been watching this guy dividend talks on YouTube. I think I responded to one comment of dividend talks on Twitter around ASML. Anyone followed NANC, ETF Nancy Pelosi? Okay, I did not. I don't know if anyone else has. Jose saying we are having rolling recession. We've been having rolling recession for last 2 years. Remember 2023, where I think all the talking heads and all the economists were predicting recession. Most of the Wall Street firms were predicting recession and the markets to go down in 2023. All of them were proven wrong, right? Well, that's why I don't pay too much attention into what the analysts or economists have to say, rather follow where the money is going. Shrikant saying August 20 deadline, Trump has announced tariff for EU, Mexico, Canada, many other. Is it wise to come out of most position for July 29 just to stay on safer side? I would not, because my idea is I'm gonna use it for next 10 years. So I don't care what's gonna happen next few months, right? So I will not change my position. Now, I do control in terms of how much deltas I want to have. And based on that, if I see that I got too long deltas, then what I want to have, maybe I'll do some negative delta trades. But I'm not going to sell out of my positions and then incur your capital gains tax and all that stuff. Right? Unnecessarily, I'll have to pay to Uncle Sam, which I don't want to do. High IV over 50, you can use a relative IV. Oh, yeah, that's exactly what I was talking about. IV rank, or you can use IV percent time. I rather prefer IV rank than the percent time. All right, looking at a fear and greed index, I think I would want to draw your attention to the maximum that Howard Marks says. Risk is maximum in the market when everyone is feeling riskless. That's where we go and do some crazy stuff because, and everyone, this is like the delusion of the crowd. On an average, crowd is right, but sometimes you get into the delusion of the crowd stuff, which could happen when there is an extreme greed in the market. I am optimistic about future, but market rarely goes continuously up uninterrupted. So looking at where the fear and greed is right now, I'm being a little cautious. Not that I'm going to sell all my stock because I don't know about what the future holds. I don't have a crystal ball. And I don't want to build my portfolio in a way that I have to know what the future holds, because then it means you lost the game even before you started. Right? So I can't tell you how many times some friends, sometimes my spouse will ask me, she'll ask me, what do you think, how the market will do? I'm like, I have no idea. Then why are you putting money in the market? It's a very difficult question to answer, that you don't know what the market's going to do. And then you have a lot of your savings or the money in the market, right? But I think what at least I had to learn as an investor is, if I were to know what the market is going to do, and then I've lost the game before it started. I lost the game of investing even before it has started. So I don't know what's going to happen, but rarely the market goes uninterrupted. And I picked up the fear and greed index over the past 1 year. The best opportunities are when the market is in extreme fear. Look at an April. I think it was the first time, maybe in a year or so, maybe it happened during the last year yen carry trade blew up, that I saw fear and greed index in a single digit. And maybe this year it was during the April tariff. These are the best times to invest, is when everyone is feeling fearful. That's the time you should be greedy. So I'm not greedy right now. I'm not putting any more positive delta trades right now. I'm not doing any more short puts just right now from a premium harvesting perspective. I might do either the negative delta trade or delta neutral trade right now, right? But I will, become more greedy to add more positive deltas once the dial move towards fear or extreme fear. Okay, so that's where cash or the buying power. I looked at my June numbers. I've used only 25% of my buying power so far. I want to hold that buying power when there's a fear in the market, when everyone will be selling some of the great businesses at much cheaper prices. That's when I want to go and then shop big in the market, when there's a discount in the market. Not right now, where everything is priced higher. It's okay. The assets or the businesses that I hold are going up, but I don't want to put more money in some of those stocks. Right? Lastly, think long term. Right? This probably is a perfect segue to the question on what's happening during the tariff. Should I exit the positions because of August 1st? There's always something in the world that will entice you to sell. Maybe August 1st, we're having a new tariff. We don't know how the market's going to behave. But market will find its way out of it. Like I always say, don't underestimate human ingenuity. Markets is a collective representation of human endeavor. We have had tons of stuff so far. Depression, world wars, how many wars we had, hyperinflation, Black Monday, tech bubble burst, 9/11, GFC, and then latest one, which is probably still fresh in all of our minds, is a COVID. 34% drop in the markets in what, 2 weeks, 2 to 3 weeks? And here we are at a new all-time high. We'll find our way. That does not mean that it's all every year is going to be up, but eventually we will find our way. Looking at the sector wise, S&P 500 is 7%. I think this probably is a total return, which is great. Sector wise, industrial, information and communication still doing great. I mean, look how the tables have turned. Right? I remember earlier the information and communications were at the bottom, and now they're like top 3. What has not worked here so far is healthcare. The consumer discretionary is being pulled down by what's happening in China, and of course the big stuff is Tesla. China's consumer market has not recovered, and a lot of luxury companies, high-end companies, high-priced businesses, they've been impacted by what's happening in China. Last is the healthcare, and today healthcare as a percent of overall S&P is probably at the lowest in the last many years. So healthcare hasn't performed. It's down close to 4%. And in terms of overall composition in S&P, it's at one of the lowest points. So that's on a sector wise. What did I buy or sell this week? I bought a little bit of a Mercado Libre in my portfolio, and no other sells. So these are just the stock buy and sell. Options, there are tons trades that I've done, but from a stock perspective, this is the only one that I bought. Again, this is not a recommendation, but we do talk about a lot of stocks, and I want to be transparent in terms of whenever I buy or sell any stock, I will come and tell you this is what I've done on my regular taxable brokerage account. Cool. Any questions?
Hey, Vivek, Shrikant here.
Yeah.
May I know the strategy behind this buying Melly? Just to
I like the business of Melly, and I was like, I had a little bit of cash that I wanted to deploy, and I could not find anywhere else to put in. I'm like, I'll buy Melly.
So it's a long position in stocks?
Oh yeah, it's a stock position. It's a long position in stock. This is my biggest individual stock position in my portfolio. So just added a little bit to Melly.
Yeah, thank you.
Yeah, nothing trying to time the market or anything like that. I mean, of course, it is down. I think I bought at 23.80 or something, somewhere here. I think bought on 14th. Yeah, so just that I want to add to Melly as and when I see some opportunities. So rather than doing it at 2,600, I would rather do it at 2,400. That's the thought process. I still like this company. And and one more reason is over the last week, there was another news on Melly is their corporate bonds. Right? The stock has done great, right? So I first got into the stock when it was $350. Over the year, stock has done great, but I think early this week or maybe late last week, S&P also has upgraded Melly's credit rating. Means Melly's, when Mercado Libre is raising a debt from the markets, so it moved it from to a investment grade, a rating with BB plus or BBB plus, whatever that number is. So rather than from being a junk bond side, now the Melly's credit rating is on investment grade. How that will help is now Melly can raise more funds to expand into their credit card business and their loan side of a business, Mercado Credito. This is the new businesses that have been growing like crazy. And then to grow those businesses, you need to have a warehousing, you need to have an ability to raise funds at a lower cost. I mean, so that you can give a loan to merchants, etc. And if now your investment grade credit rating has been improved, my assumption is Melly will be able to tap into the debt markets at a cheaper rates than what they have been able to do it so far, right? So that should bode well. I don't know what's going to happen next 1 year or 2 year, but at a long term, I think I like the company, I like the management, I like the business. So I'll try to pick up whenever market gives me an opportunity on the stock. That's the only reason. I would have done, some of you may question why you did not sell a put or put spread, right? Selling a put will consume a lot of buying power because this is like $2,400 stock. Selling a put spread, this is not a good ticker to trade options because the bid ask spread is so wide that you just can't manage it, right? And I've been doing options on this, trying to sell iron condors and call spreads or put spreads. But overall, that's not been a profitable trade for me. If I add up the net impact of all the option trades on Melly, it's not a profitable one. So that's why, I mean, if you really look at its bid-ask spread, man. You go to the August one, which is monthly. I'm not even going to the weeklies where you don't have any liquidity. These are wide, $6, $7 wide bid-ask spreads on both as a call as well as a put side. So not the best instrument to trade options. So I just dealt in the stock itself. All right, let's. Ramesh says, why not few ASML? I sold a put spread on ASML, so I did a bullish trade. ASML is at least better in terms of from an options perspective on when it comes to trying to. So ASML, I have an August expiration option trade, right? Not as tight bid-ask spread as I would want to, but it's okay. It's better than having $6 wide. Number two, on ASML, I have some more risk factors that I'm seeing in ASML. I thought we'll talk about ASML when we look at an earnings. So hold your question. Just remind me to tell you what breach am I seeing in ASML mode. So how many option trades do you do approximately in a week or a month? I'll give you the number. Maybe, I mean, I have close to so far in this year. Let me just look at the overall number. Most of my trades will be kind of a hedge trades, but overall, if I were to look at a number, including the hedging trades, I have done, where's that? Maybe 800 or something so far. Yeah, 830 till date. No, I'm not really focused on every week or sometimes I don't trade much in a week. If there is nothing, I don't find anything useful. Like when I was traveling, I didn't do much. Last week also not too many of them because I was busy in the shop. One day whole gone in Schwab workshop. But so far I've done close to 830 trades for this year. When the excuse me, when the fear and greed is extreme greed, what sort of overall option portfolio delta you aim for? Assuming you do negative delta neutral trades. So when it is on a extreme greed, I would actually try to add some short puts or put spreads on the great businesses that I want to own that have been punished just because overall market is feeling jittery about it. Overall delta perspective, that depends on your portfolio size and how much delta you want to own on the portfolio. But I will try to do more short puts on the good businesses at that point of a time. Why don't you play Netflix? Yeah, I don't know. I think 3-4 years ago, I used to play Netflix. Then I stopped following Netflix as a company. And if I don't follow as a company, then I don't want to be in a business of trading it. Just from a premium perspective, maybe, but I don't follow closely the Netflix as a business, and hence I'm not trading Netflix. I don't think I've done any Netflix trade this year. So generally, if I don't hold a position or I don't know the business and I'm only trying to do an options, I will just do it on generally in ETFs, right? Let's say I'll do it on a I right now have a put spreads, not I think couple of naked puts, short puts on XHB. I'm not too close to the housing sector. I don't understand, what's a business from a advantages perspective. I'll just basically put on the ETF, right? So I don't think I've traded Netflix. Yeah, housing sector is tied to rates, and I'm hoping that Jerome Powell will cut down the rates. And hence, I will be able to benefit from Jerome Powell's from the lower rates. So this year I've done option trade on 62 tickers. I'm looking at, yes, 62 tickers. How much fees have you racked up? Don't rub salt on my wounds, Dave. I need to call up Charles Schwab and say, give me a better rates. So, all right, let's look at the crypto side of the house. We crossed the 4 trillion for the first time in crypto industry. So whenever I think I was maybe good for a walk, or for whatever reason, I was on my phone and I heard that around this whole, the crypto bill, I think that was passed by House or maybe. Then I went into CoinGecko and took a snapshot immediately then at like 4.02 trillion. I'm like, I don't think I've ever seen like a 4 trillion as a number for overall crypto. Let's see where it is right now. Now it is 3.926. Yeah, so looks like after the 4 trillion, maybe we gave up some. That's so, but I mean, nothing to complain about it. Let's look at where the biggest assets are. So Bitcoin has been range bound. I think the highest it hit was close to 123, and now back to 117, which is good because I have some short calls. So I think I have now all strangles on IBIT, and the short call side of the strangle is 70. So if it doesn't go too high, I'll probably close all of them for profit. I close all my short puts for profit, but now I have a strangles, which I put as a delta neutral strangles. I think July 25th, then I think I have August 1st, then August 8th. I have next 3 weeks, some delta neutral strangles. So I'll close them, but hey, there's nothing to complain on, at least on a crypto side. The biggest gainer over the last, I think, 2 to 3 weeks has been Ethereum. That's again because of the stable coin. Ethereum is the biggest ecosystem where the most stable coin will be used for transactions and all that stuff. Bitcoin is narrative has changed to more of a store of value. So the governments and the Fed try to do naughty things, which they will, right? That's where the Bitcoin continues to hold its value. And now this asset class has been legitimized. So I expect more good things from this asset class. A few views. Again, this is what scares me. Every company has been announcing that crypto treasury, and companies are actually changing their business model to become a crypto treasury company. And the height of that was the craziness is, I think there's a massage company in Japan or in China that have now converted itself into a Ethereum treasury company. I saw another company, they say, hey, we're gonna raise $200 million to become hyper liquid treasury company. I can understand something around being a Bitcoin treasury. I can't wrap, or maybe it's, I can't wrap my head around even Ethereum also. But who cares? When it's like a SPAC moment of 2021, right? When you announce your company as a crypto or Dash treasury company, fill in Dash with whatever you want to. Right now that it's being filled by all sort of a crap, the stock price goes high. People just, whatever we are seeing with the micro now strategy, everyone is trying to follow the same playbook of strategy and say, hey, let's become a treasury company. I don't know how long this craziness will stay. So I asked ChatGPT or maybe Gemini to give me a list of the companies that have announced your crypto treasury strategy over past 6 months. So MetaPlanet, we already know that it's a Japanese company. They have been a Bitcoin treasury, exactly same playbook as strategies in Japan. And this stock has been the best performing stock on Japanese stocks exchange, right? I don't know, like Bit Digital. Okay, you're a mining company, maybe you're an adjacent business, and you now want to become a treasury company holding this on your balance sheet. Maybe you can make use of it because you understand this ecosystem. Sharpling Gaming Company as bet. It's a sports betting company, but then it tied up with I think Josh Lubin's company, Ethereum co-founder, right? And as bet, it went up high and then it all came crashing down. You need to understand the economics of how these things work, right? You're a SPAC or unknown company, you announce Ethereum treasury, and then a lot of these. Maybe some other session we'll talk about how the pipe deals happened during the SPAC side. We all saw it. Now I'm seeing a similar behavior in all these companies. I'm not gonna go through all of them. Look at a pharma company. It's developing cancer therapy. Now they're saying we're doing 100 million as a Litecoin treasury. And got a Charlie Lee to its board of directors. Suddenly now Charlie Lee, who is a co-founder of Litecoin. By the way, in 2021, Charlie Lee, he sold all his Litecoin holdings, majority of it, before at the peak. And at that point of time, I remember the community was like so dedicated. What the heck, you rug pulled us and all that. I don't blame him. He's there to look out for his own self. Gumi Incorporation is video game developer, right? 6.3 million Bitcoin. Remix Point. Exodus Moment. Auto dealers, a software company that creates auto dealer platform, allocating $25 million to this. And I think there will be a lot of a hype. There are a lot of, I shouldn't say scam, but allegedly nefarious players that will come into the market trying to avoid paying taxes. I'm putting my tinfoil hat right now. And here's what I'm thinking, why we are seeing so much. Assuming you have big holding of any crappy coin, you can put a name, okay? And if you sell that, you have to pay taxes on it, right? What you do is reach out to any other unknown company and say, you know what, let's make a deal here. I'll transfer or I exchange my concentrated holdings for your shares. You become a treasury company of that Dash asset. And right now, markets are rewarding all those treasury companies with 2x to 3x net asset value. So if I hold $10 million of Dash coin, actually there's a Dash, it's actually coin. So whatever, right? Own $10 million Dash coin. I don't want to sell and pay the taxes on it. Let's enter into a pact. I'll exchange it for your shares. You become a treasury company. Your shares will be traded at 3 times the value of these coins. Then maybe I'll sell those shares. And then I don't mind paying the taxes because I made a lot more money. Okay. There is a way, there is something called exchange funds and all that, so that things happen. Again, there's like my tinfoil hat around why all of these companies are suddenly announcing, why you have to do with a hyper liquid treasury? Is hyper liquid a store of value? As a corporate treasurer, you get sued, for such stupid decisions. So anyway, this could be happening, possible, and that's the reason why we may be seeing a lot of this stuff happen. Okay, in either case, even if it's not this conspiracy theory, I mean, if you announce this and your stock price goes up 2x, 3x, right? You made your money anyway. You rewarded your shareholders anyway. Third thing is a lot of these deals are sponsored through the PIPE deals, private investment in public enterprises. It's the same concept that we saw in SPAC in 2021. But then you also have to be aware, I think I covered this in one of previous session, right? How the dilution will, etc. will happen. So if you want to acquire any of these companies that are announcing the deals, etc., understand the PIPE deals and how much dilution it will happen when the lock-in period expires. That's what we saw with SBET. After the lock-in period expired, a lot more shares came into the market and it dropped like a rock. So right now there is, I think, BMNR, Bitcoin immersion. That stuff is happening. Tom Lee, the very vocal supporter of the crypto asset, he's been named as a chairman. Now he's pumping about why Ethereum is the best asset. Oh, I have nothing against Ethereum. I like the ecosystem. I like the progress that's been made. Maybe you should go and read. I think Fidelity has recently published a report on Ethereum. Let me just bring that up. It's not exactly Ethereum, but it does talk about Ethereum, starting with the overall blockchain. It's a good report. Will tell you the stuff that is happening in the ecosystem. But that is different, and what I'm seeing, a lot of these treasuries and all that is different. So be a little careful. Don't get carried away and start buying the shares without you understanding how the deal has been structured. Jose says Bitcoin, Ethereum generally cannot accept typically buy. That's what it's supposed to be. But sometimes the companies will seed it, right? So right now, if you look at not Howard Lutnick, now his son runs the company, right? Cantor Fitzgerald. They tied up with the Blockstream Adam back to get some of the Blockstream holdings as a seed to fund their, it's like, I think, $3 billion worth of Bitcoin treasury. So I expect that to happen. So other thing, I think, which is more important than the treasury ones is, we had 3 crypto related bills. The status might have changed, or I didn't see what's happened on Friday. I know Friday the Genius bill was passed, so that I updated it, but I don't know about others. So there are 3 things that the market has been very keenly watching when it comes to the crypto side. One is the Genius Act, which is around the stable coins in terms of who can issue stable coin, what should be backing stable coin, how the transaction would happen. So it would basically provide a law, clarity to the players, to the big institutions around how you can play in this arena. So far, we never had any law around it. So it was based on whoever in SEC, and SEC is before the latest one, and till the previous administration was, let's sue them first, and then we'll fight it out in the court, right? So didn't really work out well. So that actually has been signed into law by President on July 18th. The second one is a Clarity Act. It is a digital asset market, which is, I would say, even a more important than just a stable coin, because this will provide a regulatory clarity on what's a commodity, is it a security or not? If you're trying to do some IPO, ICO, are you allowed to do it or not? Right? Does this fall under SEC jurisdiction? Does it fall under CFTC jurisdiction? Who's going to create a rules around it and all the stuff, right? So this is really, really required because SEC had sued tons of companies. Like every company, oh, you are issuing, let's say Litecoin, oh, it's a security, right? There were no rules that will govern and tell the companies what is security, what is non-security, right? So Coinbase was sued, Kraken was sued, Gemini, every big companies were sued. Now, at least, if this bill get passed through both the sections of Congress, we will have a clarity on how the companies can play in this market, right? What defines security? What defines a commodity? That's it's called a market structure bill, and I think in House it is considered, it called as a Clarity Act. Probably Senate will have a similar digital asset running in parallel. Right now, I would say it is they have nothing going on, so I would say it's a red state. House, they will probably put it for voting maybe next week. I don't know if anything has been voted on after Friday or not. Third thing is anti-CBDC Act. US does not, the lawmakers wanted to make sure that the US does not issue its own CBDC, because that will be like a draconian measure. And they wanted to make sure that there is a law which prevents Fed from issuing a CBDC. So again, there is no bill in Senate, but in House, these three bills were to be debated. One, the Genius Act has passed the House, and this was already, and no changes from the Senate side. Both the sections cleared it, went to President, we signed it. So these are the three main ones. Other thing that I noticed this week, which came to an executive order, so could be reversed by the next president, is allowing alternative assets in 401k plans. So just for the fun of it, I actually went back and looked into these weekly discussions, and I realized the first time I talked about in this Saturday meeting around the digital assets or crypto assets as an alternative assets was in September 2020. So almost 5 years ago. And I think that time I presented a list of few assets. We had a Bitcoin, we had an Ethereum. For whatever reason, I had a Litecoin in it because these were like top 5 or 6. I'm looking at, hey, understand the space. These are the alternative assets that I do see a lot of traction coming in. Just be active in it. Now, looks like it is going to find a space into $9 or $10 trillion of retirement fund, along with a lot of other stuff. I'm not a big fan that by default, the 401k planner should put us into other alternative assets like private equity, private credit, but a lot of that industry, alternative investment industry, has been lobbying really, really hard to get a slice of, let's say, $10 trillion 401k market. And President has signed an executive order to, and basically, I think, ask the regulators to see how we can create a framework to allow these alternative assets as a viable investment options in your 401k. Today, in your 401k, you can invest in stocks, bonds, right? You can't invest in commodities. You can't invest in gold in your 401k. You can do it on an IRA. You can't invest in in let's say any of these crypto assets. You can't invest in private credits, but now you may be allowed to invest if regulators can find out. So president has done an executive order. So that would also bode well for some of these crypto assets, because if you listen to some of the proponents from Wall Street, hey, if you have a 2% in your portfolio, you would have done way better than just holding SPY. The allocation, the ideal allocation, I think BlackRock is now pumped it up to 5%. I think earlier it was 2%. I think Fidelity is still around 2%, but 2% or 5% of $10 trillion is a big money. And these have a little higher fee. And so those issuers want to mint a fee. But you have to decide, do you want to play in this or not? There are obviously pros and cons of alternative investments. So I am not in a favor that by default everyone should be put in. Allow me the choice. I want to play in this. Yeah, then I don't put me by default, but give me the choice whether I want to play in this market in my 401k or not. All right, so that's on the crypto side. One other additional stuff, which is sometimes I say could be a little scary, was a Satoshi era wallet moved 80,000 Bitcoins. So far, I think all the chain analysis and there's a bunch of those crypto analysis companies, they've all considered these 80,000 Bitcoins as lost Bitcoins. Because since these wallets were created in 2011, and since 2011, nothing has moved. Where Bitcoin was in 2011, right? If you look at, let's go to Bitcoin. Let's look at Max. 2011. It doesn't even have to, right? Maybe $100 or whatever. Right? This doesn't go below 2013. From that, someone bought or maybe mined, I don't know how the origin of those 80,000 Bitcoins, and held through all this volatility. It's very difficult for humans to do it. Right? I don't think anyone can do it. Some of you may think, oh, it's a easy money, so I held it. But I think it's a very difficult to hold through all these ups and downs. And now eventually sold those 80,000 Bitcoins. These were bought for 54,000. And now when they sold at 80,000, it is like $9.6 billion. Talk about an investment. This is like pure, it's like a Warren Buffett square, right? Bought it and held it. Don't care what's happening. And Bitcoin have had multiple 80% drawdown. And that's why I think the industry thought that these keys have been lost. But now it moved. And the ballsy move was that when the first transaction that happened was a transfer of 10,000 Bitcoin, which is like close to $2 billion, and no test transaction. Right? So very recently, I helped one of my friend to move his Bitcoin from his hardware wallet. He had like Nano S, and to its Coinbase account. He said, I don't want to deal with this hardware and all that stuff. Move it to the Coinbase. So I basically took the Coinbase address and I moved that. But before moving his overall crypto holding, I'm like, let me just do a transaction for like say $10, $50. Make sure it goes fine before I do your like. He doesn't have millions of dollars or hundreds and thousands of dollars. And I was like, let's not take any risk. Let me do a test transaction. Then I called up and I was like, did you receive? He says, yeah, it is. I received it. Okay, let me now send the remaining one. And this like 10,000 Bitcoins. No test transaction, boom, send it straight away. But yeah, this is real power of buy and hold. But I don't think everyone will be able to do it. In a hindsight, looks great. Most of us, at least I would have sold majority of it before this, right? But it is what it is. Now I wonder how many other wallets of that era that market has assumed that those are gone, those have been lost, keys lost forever, might wake up one sudden day. Could be possible. Some Twitter fellas are saying that it is Roger Ver, so-called Bitcoin Jesus, but there's no confirmation on who owns these wallets. We have no idea. Shri says he's a smart investor, sold at the right time. I think at the right time we'll only get to know in hindsight. If Bitcoin reaches to 250K, what Tom Lee is saying, or in 2030 it is 1 million, like Kathy Wood is saying, or if it is 125, like I think Rick Reader is saying, or sorry, Rick Reader, I think 150 or something, whoever, right? Then we might come back and say, oh, it was a stupid decision, you could have made more money. But I'm happy about whoever the person is that he held through it. I mean, that's more important lesson around this. New regulation, not new regulation, but clarification, which was earlier the banks were prohibited from taking custody of crypto assets. Now, the agencies have issued a joint statement saying banks actually can custody crypto assets. So welcome. You may, and I think, I think Wells Fargo, which said, or maybe Charles Schwab, I think it's Charles Schwab, which said they will allow their customers to buy Bitcoins on their platform. They're working towards it. So now instead of buying Netflix shares, Dave, you can also buy some Bitcoins while you're buying Netflix shares on the side. Anyway, so I expect a lot of big banks to enter into this area. So BNY Mellon and Fidelity Digital Assets, they're already in the custody business of crypto side. BNY, so Fidelity Digital Assets was not really a bank. It was a separate company from Fidelity, and hence they were. And BNY Mellon, they got a special approval from SEC and OCC that they can custody it, hence they were. But now I'm seeing statements from other Wall Street firms like State Street, Citibank, and JP Morgan Chase. They are like, yeah, we will offer these services. We are working towards it. 2026, 2027, we'll offer these services. And then I also saw a note from BBVA that they will start custodying Ethereum and Bitcoin for their clients. So these banks, Wall Street firms, will not let Coinbase walk away with all the custody fee that Coinbase is raking in right now. Right? Jeff Bezos says, right? Your margin is my opportunity. So Coinbase's margin has been opportunity for all these banks who have been salivating at the prospect of Coinbase. I think the listed rate is 2.5%, 250 basis points. Okay, there's enough competition, 125 basis cut into half. Still, it's a big amount of fee. So they were waiting for clarity and regulatory, so far they were prohibited from regulatory agencies. Now they've been given a free hand, they will go. I expect them to go. And big on the crypto side. All right, let me go through some comments. That's all I had on the crypto side. Some of the things that I saw in the markets. How much tax is involved when selling that? Just give me the tax amount, I'll be happy. I rather hold my NVIDIA and sell calls and puts. So I was just saying, it's up to you, whatever works for you. For me, like I've always been saying, this space is like asymmetric bet. Asymmetric bet means you don't need to have a big position. If you're not comfortable, a small is enough because if really it is an asymmetric bet, having a small position will be sufficient because it will become very big. And if it goes to zero, you'll be happy that you had only small position, right? So I actually don't, me personally don't alter classify black or white. I love playing on the probability area, and hence maybe I'll take a small position. That should be good enough. Dave says missed Bitcoin all along. Maybe we are still early, Dave. Have you done stock review of Circle? No, I'm not. I don't think I reviewed Circle S1. I mean, the business model is pretty easy to understand. All the income is coming from the treasury yields, which they don't give it to the consumers. Their expenses are the distribution expense that they give it to Coinbase, etc. Coinbase make more money through the USDC than the Circle itself make. Right? So I don't think it's a very complicated business from business model perspective. If yields are going higher, then the stocks are going higher. No, if the bond yields are going higher, the treasury yields are going higher. Okay, so for Circle, right? Yeah, but if the yields are going higher, maybe the overall stock market may not go higher because hey, if I can make 6% the stock market as a pension fund, my limit is I have to make 7%. Why take a risk in the stock market? I'll make 6%. Maybe small amount of money, I'll put it in a stock market to generate additional 1%. So there are a lot of factors. You don't know which one will win at that point of a time. Dave, I used to own GBTC, got out too early. Now I hold B2 and IBIT. Yeah, that's the same stuff as a Bitcoin, right? So you're still in the game. Now the instruments have changed. I'm into IBIT. So, but still the same ecosystem. All right, let's talk about the China. Right, so before that, today morning I took a screenshot of some of the Chinese stocks in the ETFs that we have. So FXI is an ETF, MCHI is ETF, ASHR is an ETF. All other are KWeb is an ETF. Yes, that's an internet ETF. All others are individual companies. These are a little more popular companies. That's why I picked up. There may be some other companies, and these trade on US exchanges. I've not picked up, let's say, companies like Xiaomi. It's done very well in a Hong Kong exchange, but its ADR does not trade on US exchange. Anyway, I just had a list. I mean, I track some of these, so I hold some of these in my portfolio, and have done pretty well. Right? Except JD.com, all of them have a positive year to date, and some of them are like 50%, 40%. Baba is up like year to date, it's like 40%. I mean, still, there's a lot to catch up from its all-time high. It's still down 60% from its all-time high, but it's caught up a lot in this year. Right? And recent report was Chinese economy expanded by 5.2% in the second quarter of 2025, right? Which is slightly better than what the markets were projecting, but it is slight deceleration from a Q1 5.4% rate. So net, market is not crashed. China market is not crashing. It's not really booming. It's okay. It's doing fine, right? But for an ETF investor, and this is why I wanted to talk about this topic, is the devil is in the policy details. Right? Again, China and Chinese market is also impacted a lot by what the CCP policy is. And I have seen over the last 2-3 years, every time CCP will come and make a statement around, oh, we're going to do a stimulus package, boom, market will go higher, then nothing happens, markets come back down, right? Way back in 2021, was it 20? I think it was probably in 2021, where the Chinese CCP came up with those 3 red lines, guidelines around real estate investments and all that stuff. And that caused a lot of turbulence on the real estate markets. Still, Chinese real estate market has not recovered. So we'll talk about of that. Overall, it's on its way to achieve 5% full year growth target. I don't really put a lot of faith on this number, because if President Xi has said that he wants 5%, each of the governors of the provinces will figure out a way to get 5%, right? You can do government spending, you can engage in a non-productive tasks, etc., to just increase the GDPs. And eventually we don't even know is that number is right or not. But let's say right now the policymaker giving them some rest from yet another stimuli. So that alters the math for the investors which are considering or owning China-themed ETFs. Some of these ETFs will flourish, some will stagnate. So if you are investing in China through these ETFs, we need to understand what the Chinese government policy is. So let's dissect it. Exports are up. In Q2, China's export, despite all the geopolitical tensions we have seen, is still, China was able to increase the export to Southeast Asia by 13% and EU by 6.6%. Talk about us trying to counter against China. Rest of the world, they still need Chinese stuff. Maybe US companies have been dissuaded by the administration to import from China, but rest of the world still needs it. So that bode well for Chinese ETFs like MCHI, because it provides diversified exposure from companies across all the Chinese sectors like industrial, consumer discretionary technology. Or FXI, which is basically 50 largest Chinese securities. Right, so if you are looking at China exports doing good, these are the companies, right? Domestic demand, however, is still not working out. Domestic consumer has still not recovered because most of the consumer wealth in China has been tied up in real estate, and the real estate has not yet recovered. Consumers are not feeling that good. I mean, you wouldn't. If I bought a house for $500,000 and it's still down, like it's valued only at 300K, I'm poor. I'm losing money on paper. I won't feel great. I won't be going out and spending. So that's happening in China. So what that has not recovered is K-Web, etc. Right? They're still down. And looks like there's a China technology ETF, CQQQ. So let me take down these new tickers, CQQQ. I got TME, Billy, and then Tencent, TCEHY. I'll probably add it to those China tickers list. So these still have a long-term potential because the consumer has not recovered yet. So if you see currently, these ETFs are going through, have done well. How much can they do more from a K-Web and some of these? They still have a room to grow if Chinese consumer economy becomes better, right? Now, third is a policy driven, which means this will be betting. This is the route to bet on China stimulus or not. Right? Through the direct route is this: you go to the A shares of the stocks that directly trade on Chinese exchanges. I'm looking at the other way around, which is, hey, can I do it sitting on a US exchanges? You have ASHR. I never heard about this until I saw this report. It follows the performance of CSI 300 index, which is the most largest in the liquid index in mainland China, which is good. So I can get exposure to this is like S&P 300 of China. And it means any policy shift, any stimulus, any infrastructure improvements, any state-owned enterprise, any changes in that, these big companies which are trade on the mainland China will be impacted. And if I were to take an exposure on it, ASHR. So ASHR respond more quickly to Chinese policy decision than internationally exposed like FXI or MCHI. So if we want to play what Xi Jinping is going to do, ASHR is your ticker. So let me look at ASHR and what does it hold? ASHR. Okay, yeah, because this is okay. I search here ASHR. What are the holdings? 289 holdings, not exactly 300. That's fine. CATL, which is the big battery manufacturer, which just went IPO recently on Hong Kong Exchange. Ping An Insurance Company, IBCI, Industrial Bank of China. This is, I think, the biggest bank in the world. China Yangtze Power Company. Yeah, so BYD, you can actually, I mean, BYD trade on US exchanges, so really don't need this. But yeah, it has got a well-diversified holdings of Chinese companies.
But also something other.
All right, so I'll have to mute you, Shrikant, the background noise. Yeah, so this is something new I found out. So if you want to get exposure to CSI 300, you can do it sitting in US, trading on US exchanges through ASHR. What's his expense ratio? Inception date, 65 basis points. That's high, right? But better than some of those yield match stuffs. I don't care about dividend. Beta of 0.32. This is interesting because it gives a little more uncorrelated or less correlated asset class, right? If everything is an SPY, then this is how you can get some more exposure which is little less correlated to SPY. Cool. So that is ASHR. How is ASHR an option market? And the reason I never looked at it is because FXI and the KWeb has an option market. Okay. It used to be much better, but nowadays I see beta spread is wider. What do you guys say? 33. Yeah, beyond the ATM prices, there is not much. We go to September. But yeah, I mean, beyond 2-3 strikes out of money, not much of a liquidity beyond this, but it does have a decent option. Not the tightest one, but yeah.
ਹੁਣ appointment ਬਣਾ ਲਈ ਹੈ ਨਾ ਕਿੱਥੋਂ ਬਣਾਉਣੀ ਆ ਘਰ ਵਾਲੀ ਤੋਂ
Hold on, I have to meet you guys, Ravi. But I think it's a decent. So I might look into this. I never traded in ASHR, never held in my portfolio, but now I'm intrigued by it. I mean, rather than holding, I mean, I hold Baba and some of these shares, and then KWeb I hold, which is again has got Baba, etc. in it. Might as well diversify with a little bit ASHR. Right. Okay, now looking at the stimulus side, so far Beijing has resisted a new round of economic support, but the pressure is mounting. In the latest report, they are looking at 1.5 trillion yuan, mainly to lift consumer spending. So if this happens, ASHR and KWeb should do good. September is now under market radar when the next batch of stimulus might arrive. We'll see what happens in September. And finally in April, I think we can, based on what happened in August 12 deadline, if the tech-based ETFs could gain, if we don't see the tariffs, the craziness in the tariffs. Right? So, but when it comes to China, the overarching risk of you don't own anything. If you're investing in, let's say, Baba, you don't have any operational control, and you should be comfortable with hand in glove with President Xi. That overarching risk still applies. That doesn't go away. Irrespective of whichever ETF you pick. Having been comfortable with all that, if you want to invest in China, there are a few ETFs and which work and behave differently and track different sections of Chinese economy for you. Okay. So, any investors in China? I mean, I have some investments in China, but again, at the end of the day, it's a position size, right? I'm not going to make this as a 25% of my portfolio. No investors in China? I know, Ramesh, you are always out of that. Okay, Jose has KWeb and XWeb. Yeah, I do have that as well. All right. Oh gosh, we are already 12:11. I didn't even realize that. Maybe we'll cover earnings later, and maybe we get into a breakout rooms and chat with other fellows around based on whatever you may want to discuss. What do you say? Or shall we go on to the breakout room? Or shall we discuss on earnings? Earnings. Okay. IT consulting firm like CTSH, which I guess maybe, is it Cognizant? ACN is Accenture. Which is better? I don't know which is better. Really, I have not looked at any of these. Okay, so let's go through earnings. So let me bring up let's talk about TSMC and ASML. Give me a moment. Let me bring up my document. I think I made some updates to it yesterday. So this is not on the tweet or on the post. We don't call it tweet anymore, it's a post, right? I posted about TSMC after it had announced earnings, but then I made a few more changes yesterday. So let me give you the latest one. So at a high level, nothing different from what they've announced in the previous quarter in terms of the tailwinds behind its business. So anyone needs introduction to TSMC? Is it a new name? All right, so I'll give you 2 minutes introduction. TSMC is the company on which all other companies that use chips are dependent on. Apple depends on TSMC, Nvidia depends on TSMC, AMD depends on TSMC, Broadcom depends on TSMC. It manufactures 70%, maybe 60% of all the chips in the world, and it manufactures close to 90% of all the high-end chips in the world. Right? Nvidia is not a chip manufacturer. Nvidia is chip designer. Who manufactures the chips for Nvidia? It is TSMC, right? So it's a Taiwan-based company now, and if TSMC goes away, the world will come to a stop, right? This is the company which manufactures all the chips that are in cell phones, in our personal computers, in your microwave ovens, in your automobiles, etc. Very, very important for the world. And that's why we always talk about US has to protect Taiwan because TSMC is Taiwan-based. We cannot let China have it. And of course, we're trying to de-risk it by having TSMC build plants in US. Look at the status. So revenue up 38.6%. These are all new Taiwanese dollar. So I'm not going to get into every number, but if you look at it, pretty good, right? Growing up close to 40%, gross margins are growing close to 50%, and your net income is like up 60%. There's nothing to debate about it. EPS growing fine in USD terms, because we all invest in USD basis. It would have even done better, because as compared to last year, because the Taiwanese dollar has become a little stronger, and the revenue from a US dollar perspective is up 44%. In new Taiwanese dollar, it is up only close to 39%, right? Gross margin has come a little bit down, and I expect it to go further. Every year, expect it to have a 2% impact, because a lot of fabrication plants, TSMC is building outside of Taiwan, which is more expensive to operate. Right? Labor in US is expensive. So they've already hinted that every year till 2030, expect 2 to 3% impact on gross margin. But even with that impact, it is up more than 50% gross margin. They've guided for 53%. Still great for them. It's a manufacturing company. They've guided for close to $38 to $42 billion capex, which seems to be fine. Based on the Q3 revenue guidance, and this all came up after the earnings call, so I updated it. Q4 guidance will be decreasing year over year, right? Now, if you see this and the stock sells off, it could be an opportunity, right? And the reason why the guidance that they give on so far is because TMC is not sure geopolitical issues, and they're being conservative. There was a point blank question that was asked, are you being conservative? And he said, yes. Right. So, and I like the management, which is little conservative, and, just don't go and talk crap which they cannot deliver. Okay, I have not updated this one. I'll have to find. They also pay a little bit of a dividend, right? And no share purchases. From a guidance perspective, they're guiding revenue to be $31 to $33 billion for Q3. Margin will be again a little lower. If you look at it at Q2, their margin was 58.5%. Now they're saying will be lower. Midpoint will be 56.5% because of the US fabs, right? So more and more, as and when more fabs start production, the margin will be impacted. But hey, 56% margin, I'll take it, right? Full year revenue will increase by close to 30%. Earlier, their guidance was mid-20s. So now they've inched it a little higher to close to 30%. So consider this, 30% year-over-year growth, 55% gross margin business, 40+% operating margin business, pays dividend, and conservative management, and the world can't live without it. Right? 5 sentences, investment thesis on TSMC. Rest everything is bells and whistles on top of it, right? I'll skip this. This basically gives you, okay, maybe HPC, which is all the hyperscalers that need the chips for those whole AI stuff. That is now grown to become a 60% in Q2, right? So smartphone are the Apples and all the Pixel phones, etc. A trend, I don't have to tell you much. Looking at a 5-year CAGR, 3-year CAGR, this is a great company. So a little bit of management commentary. Forex plays an important role. So quarter by quarter, you might see some numbers when converted to US dollar might change. So whenever they are reporting those numbers, go back and look at operationally how good have they done. Because the Forex, they don't control it. This is something which is out of their control. I don't want to punish the management if they're done business side operationally, they're done well, but the numbers didn't turn out to be well because of the Forex. Market will give you such opportunities when market will sell off the shares because algos will just go and sell it because numbers were not great. When you dig deeper and see operationally they're done fine, might buy some of them. The provided forecast does not include the tailwind from a now allowed shipment of H20 chips to China. Right. So the forecast that they're given for this year, it might have a little more tailwinds if NVIDIA comes back and say, I need more chips because of demand for China, and might have some tailwinds, right? TSMC will be increasing the prices in 2026. What else we can talk about? The CEO mentioned a couple of times during the earnings call that when they were asked, how about the demand? And he said, the CEO of a $4 trillion company says that they need more stuff. We are not able to supply them. And all of us know who is the CEO of that $4 trillion company, right? They just, without naming names, he named that it's talking about NVIDIA. And that when he talked about humanoid, he mentioned the CEO of a big EV company says that the humanoid will be 10 times bigger than his EV business. And we all know who he's talking about. He's talking about Elon Musk. Right. Let's look at the new production facilities. Like I said, they're building a lot of production facilities in Arizona, 6 new fabs. And you expect a little more margin compression because of these. Fab has come up in Japan, Taiwan, they're adding 11 fabs, etc. So irrespective of what happened to the stock market, stock price, I think it's still a good business to own. But if some of this AI hype goes down, you might be able to get a better price, right? So look out for those. I will look out for those those days or when market will unduly punish all the companies because something else has happened that has nothing to do with TSMC business, and that might present us an opportunity to buy this great business, right? So it is on my watch list to take advantage of those opportunities because I don't think there is anything wrong with the business. Right? Some of the headlines, if you look at, those headlines were like, oh, TSMC warn of margin compression due to Forex. Sure, he did talk about margin compression of 2 to 3%, but it's not this earning result. He talked about it even in the previous quarter, right? But, the headlines will generally be more explosive than they should be. But even with the margin compression, 56.5% margin, still great. Right? So if the stock sells up because of the headline, maybe I'll pick some more. All right.
Very
Any
quick
questions?
question regarding this TSM. So what's a more, and just an opinion, like, do you just put it on your watch list and watch it every single day, or maybe just sell a put, and irrespective of even if the premium's minuscule, and then you're just hoping that the short put would discipline you during a market price drop and execute itself? Yeah.
So, okay. So I get a question. So here's the deal. If I don't own TSMC,
Yeah.
right, then I probably would have sold a put at maybe 30 delta, 20 delta, right? But because I own TSMC in my portfolio, right? So right now I'm not selling a put because it's already all-time high, right? And then if I look at, so the other indicator, right? C says above this line, RSI just gone below 75, but stochastic is also right now. It's an expensive. That doesn't mean it can't be more expensive. But if I already own it, right now I may not have to go bullish. Today I may not have to go bullish, but I know it's a good business.
Yeah.
So if let's say stock goes down to 230, 220, etc., right? Because something has happened in the market and all stocks are selling off, maybe at that point of time, either I'll sell a put or I'll buy some stock. I'll do that. But if I did not hold anything, then let's say for first time I'm looking into this TSMC and it's a good business, maybe I want to hold it, then I will sell a put spread because there's a bigger ticker I might sell a put spread to initiate a position.
Nice.
Of course, I do want to look at what's the current. Right now, the hive is in doldrums, the rank, because after the earnings, the volatility dropped even further down. So might wait for a fall to pick up a little bit. Because right now, the overall market is all heated up. VIX is like one of the lowest ones, I guess. I've not traded in VIX for some time. It's 16.4, which is like going all the way back to Feb, right? So might as well wait a little bit for vol to pick up and then sell a put.
And what are your indicators for that volatility has picked up? We're just checking individual stock or monthly.
I'll just look at the IV rank, right? I'm plotting IV rank here for TSM, and it tells me it's like one of the bottomest.
Yeah.
Never been so low
1%.
of last 1 year. So I'd rather wait for it to pick up. All right, let's talk about ASML, and then we'll open up for other engage in more Q&A. Where's my ASML? I've not gone through its earnings call transcript, but numbers wise, I can still talk about ASML. Again, revenue up 23%, not as great as like 40%, which was for TSMC. Gross profit is fine. Operating margins is up 5%, close to 34%. Net income is up 45. Ignore that net income up 45%, but not too bad, not shabby. They beat both on the revenue as well as on the EPS. So both top line, bottom line beat. Bookings was higher than estimated, which is 5.54 billion. Estimate was 4.4 billion. Generally, I've seen the stock reactions sometimes would be, oh, your bookings were low and the stock will sell off. In this case, the bookings were actually higher. It means these bookings will get converted into revenue. It will give you some projection on the future revenue. They have a backlog of $33 billion. That means that the contract signed, but yet to be delivered. So this is like committed, but as and when we deliver the goods to the customer, they will become a revenue. You can't recognize the revenue just yet, but they made an adjustment of 1.4 billion euro because some of the customers nullified their contract because of export restrictions. Again, sorry, intro. I forgot to give the intro on ASML. So we know that the TSMC make all the chips. To make the advanced chips like 7 nanometers, 5 nanometer, 3 nanometer, now we're talking about 2 nanometer and 1.4 angstrom, or 1.4 nanometer, 14 angstrom chips. You need the machines. Today, you need those machines called extreme ultraviolet lithography machines. Right? These are very specific terms on the semiconductor side. And there's only one company that makes those machines in the world, which is ASML. It's not that they make it more efficient or they sell cheaper. There's no other company that even make this machine. So if you want to create 5 nanometer chips, TSMC will have to buy those machines from ASML. Samsung Foundry will have to buy it from ASML. Global Foundries will have to buy it from ASML because no other company creates those machines, those high-end chips. So that's a moat that they have built. They perfected this technology over 20 years. And they first introduced this EUV extreme ultraviolet lithography in 2019. And then they've been refining it since then. Each machines, the high-end machines, the latest models of the machines called high NA, they list price is close to $400 million. One machine costs $400 million. It is shipped in 3 jumbo jets in a separate as a parts, then it get assembled. If we look into the details of this, it is so highly complex machine. I don't think I have any other machines are like, it's like a bending, and I've overused this sentence, is bending the laws of physics. It's so accurate. when you're talking the chips in which the transistors need to be 1 nanometer apart, you have to be that precise. And you're using these lasers to cut through those wafers. The precision that you need is mind-boggling. You have to bend the laws of optics and laser generation. And it's so fascinating. If you want to know the details, there's a book called The Focus. There's a book called Focus, the ASML way. Go and read that. And Intel uses this. Intel is the first customer to buy the latest machines, the high-end machines. Right? So, just for reference, when I talk about 1 nanometer, biology says that that's the size that your nail grows in 1 second. Hold on. Let me ask, how much does nail grow in? One nanometer. So this is how much your fingernail grows. And if you have to build a machines that are as precise as that, you can imagine, right, how complicated those will be. So anyway, so everyone wants to know what's happening there, EUV. So today, because US does not want China to have access to those high-end chips, there is export control restrictions that restrict ASML from selling those high-end EUV machines to China. What they are able to sell is the previous machines, because, I mean, for cell phones, you need all these high-end machines. For auto, you're still okay with 16 nanometer machines or chips, 24 nanometer chips. Those are created using other different lithography machines called DUV. So they are able to sell those to China. But EUV, they are not allowed to. So, but if they will be allowed to, that will be great for them. Overall, system sales were 5.6 billion euros. So they sell the system, then they also sell the upgrade services, maintenance services, which they call as an install base. So overall $7.7 billion of 7.7 billion euro of revenue, 5.6 billion came from system sales, 2.1 billion came from install base management, means machines installed. Each machine has got hundreds of millions of dollars. They will be functional for next few decades, and they need to be upgraded, they need to be maintained. In EUV side, they expect the advanced customers to add 30% more EUV capacity. So expect EUV capacity to grow, which will be good for ASML because that's the only company that supplies these machines. So they're expecting overall EUV revenue growth to be around 30% in 2025. Right? Then you talk about two more type of these EUV machines, low NA, high NA. High NA is the latest one, which Intel has got. And right now it is going through the testing at Intel before it can be injected into for high volume production. Outlook, and this is why ASML sold off. What they told during the conference is, we see that an AI customer fundamental remains strong. There's a lot of demand from AI. Exactly same story what we heard from TSMC. At the same time, we continue to see uncertainty driven by macroeconomic and geopolitical developments. Right? TSMC say they're not sure about how Q4 will turn out to be, and hence they're not making any change to the guidance. Therefore, while we still prepare for the growth in 2026, we cannot confirm at this stage. And the market assumed that 2026 will be no growth year for them, and the stock sold off. Now, if you go back to the history of ASML, how the management have been, I mean, there is one justification why Micro will sell off, because earlier they had mentioned that 2024 would have been a stabilization year. 2025 and 2026 will be a growth year. But at that point of a time, they did not know what DJT gonna do, right? Oh, you can't sell these chips to China. You can't do this. Oh, there's going to be a 100% tariff. And now ASML could also be tariffed because they will supply the machines to you, to Intel, etc. I hope they're not tariffed, because US really need capability to manufacture these high-end chips. So we should not tariff EUV machines coming into US. But given the fact that there is so much of uncertainty, management says, I can't confirm anything at this stage. And like TSMC, ASML management is also very conservative. They're very shareholder friendly. They really look at 5-10 years down the line. They're not focused on what's going to happen in next 1 year. Right? But market sold off. Market assume there's going to be no growth on ASML, and hence the market sold off. So Q3, they're expecting sales between 7.4 to 7.9, and a gross margin again 50% plus gross margin. Overall, 2025, they're looking the sales to be around 75%. Increase around 15%, and a gross margin will be 52%. So 15% growth is not that great, right? Because earlier you have grown for 25-30%. I think that's what the market is a little concerned about. But I also understand why ASML is not coming up with the higher numbers, because they don't know what might happen in future. So that uncertainty. And given having listened through many quarters of earning calls and tracking ASML, I know that they are a little conservative when they put up the numbers. It's a dividend paying company, and it has also been buying their do the buyback of the shares. So from that perspective, pretty good. Looking at a longer term, I don't see any issues from a company business perspective. Stock was down because of this particular reason. But and the reason was because they say that their customers are more uncertain right now than they were 90 days ago. And the customers of ASML will be TSMCs, Samsungs, basically the foundries that create these machines to create the chips. And right now, each of the countries are fighting each other for tariffs, etc. 90 days ago, we had a pause, but now we are fighting for the tariffs. So every day there's a new information. So we really don't know what's going to happen. Right. So that's why the market is down. I'm not concerned about the drop in the stock price. Geopolitical situations actually make it difficult to predict anything. They are generally conservative. And with the US relaxing export control on NVIDIA chips, if they also relax it for litho machines, that will be a tailwind for ASML. And management clearly understands some of the challenges. That's, I think I mentioned earlier. I'll tell you, where do you see a little bit of a mode breaking up? Is I agreed you need EUV machines to do 3 nanometer, but you can also do 3 nanometer, 5 nanometer using something called multi-patterning techniques, which is how one of the, was it Huawei's phone, I think, or Xiaomi's phone had 5 nanometer chips, and the rest of the world was, or I think they were 7 nanometer, and the rest of the world was thinking, how could they get this? They don't have access to EUV. You could actually create it. It is more expensive, lower yield, takes longer time. But if you have a CCP behind you don't worry about the cost. So what management clearly see this, that this could breach their mode, and they've been emphasizing, instead of doing multi-patterning, use a low NA chips, and you can get it into a single exposure, much better yield, much better cost effective. But if you can't even sell that to Chinese customer, forget about cost effectiveness. The Chinese customers will use more expensive, longer, less yield, and take longer time, but at least get the high-end chips, right? But ASML has been trying to work with their customers and to wean them away from other techniques to move to their EUV machines to create those high-end chips. Number two, there has been a new architecture. Again, I'm not from semiconductor industry. Someone else should come and explain me or correct me. But so far, I think the previous architecture was FinFET. I even forgot what it's called. But right now, the new architecture is gate all around. So go and Google into that detail. If you are moving your chips to the new architecture of gate all around, in that case, you can get, these more the the post lithography steps become a lot more important than the steps that are done in lithography machines, right? So the customers start to focus on, after the exposure, what else can I do to get a similar output from my chips? Then I may not need the highest, latest lithography machines. I can do something after the lithography in the other next stages of the process to get the similar output from the chip. So that could also cause little concern. Hence, I'm not adding to my ASML position just yet, but I'm not selling it also because, hey, it'll take some time for the other new technologies to be adopted. And even if I take AI tailwind out of it, if I go back and start looking at his performance from 2022 and backwards, when there was no Gen AI, the numbers still look great. But I'm a little more bullish on the moat of TSMC than ASML, just because of some of the technological innovations that are happening. And the customers might say, yeah, I don't want to pay $400 million for a machine. I can use maybe some of the old machines and try other new techniques. That's the reason. So that's all ASML for you. But I'm not concerned about whatever happened on earnings side. I think that's the initial reaction based on what the management said about 2026. All right, guys, let's stop it right here. Oh my gosh, to 12:42. Oh, like I said, right? Always. Maybe we should make this meeting for 3 hours. I don't know. Okay, last questions on ASML before we done for the day. Dave says, I read somewhere TSMC can be independent from. Yeah, I think that'll take very long time before they can be independent, because the cycles in this semiconductor industry are very long, right? It'll take 5-10 years. So, but yeah, there are some advancements happening which may reduce the importance of the EUV machines. And that's where I am a little bit cautious on ASML side. Cool. All right. Hopefully this was useful for you guys. And we'll meet again here next week. Same time, 10 o'clock. By the way, I probably might also be doing, I'm just working out with someone, an in-person session next week, Saturday. We'll try to figure out a time. I mean, I'll still have our regular session at 10 o'clock, but after that, I think maybe one of those startup accelerators kind of a stuff. They want me to talk about some of investing to their audience. So if you're in a Bay Area, I will update it. I'll let you know. I mean, I'll probably put it on, I don't know, maybe add another session on the meetup for an in-person, which will be after this session. So I'm probably, from a content side, I've not yet figured out what content I want to present. Maybe the same one, maybe a little different. I don't know what audience will be. Will be good to meet in person if you want to meet in Bay Area. Cool. All right, with that, let's end that session right here. Thank you everyone for joining in. It was fun to talk to you after a gap of 2 weeks. And hopefully we'll continue to do this. Thank you. Bye-bye.
Thank you. Thank you.